Hey traders, what's happening? Jamie Saettele here. Today it is noon. Well, it's noon where I am. It's 1 p.m. in New York, and this is January 28th, 2016. The midweek strategy webinar here with Jamie Saettele. So we'll get into the majors as usual. Take questions. First, I do want to just touch on some of the volume stuff that I've been talking about in recent swing updates, as well as some of the posts that I've been putting out on Twitter. So when we look at volume, now I look at futures volume, okay? Call it a habit. You can look at volume obviously on TradeStation, FXCM TradeStation, that is. For spot volume, a lot of times they'll be pretty similar. Okay, get rid of everything here except for volume stuff, and it's quite simply, what is support and resistance? I mean, where you have support, where you have resistance, as I wrote about last night, those are simply vested areas in the marketplace. Okay, meaning that is where a lot of buyers bought, that is where a lot of sellers sold. There's a lot of action there. Okay, we can all see support and resistance on a chart. But this, looking at very high volume levels, and what I define as a high volume level for a daily chart is just the highest volume or the most volume you've had over 1 month. So a 20-day rolling period. So when you see a red bar like this, either up or down, that simply means that's where you have the most volume you've had in at least 20 days. Okay, and it gives you a very objective bull bear dividing level, if you will. We did have one here on the 21st, actually. You can see right here, so that would have been the highest volume in 20 days. I would still consider this to be the really significant volume level for obvious reasons. One, it was the second most volume in one day ever for Euro futures. Okay, and we're looking at this, of course, as a proxy for Euro dollar spot market. And as talked about last night, it's the second. If you were around, you've been trading for a while, then you of course remember 2010 and the flash crash, which was on May 6th, and that was right here. Okay. And what happened then was you had a rebound. We broke it. The level became resistance. Okay. And then it was, you kind of consolidated around it and then ripped higher. It actually ended up as support. And once you broke, or established support on that, you had one of the most consistent runs on the upside in Eurodollar in a short amount of time. So, my feelings on Euro as far as the bigger picture is concerned. I think there's a good chance that we see mid 120s this year. But as far as the timing of it, look, I'm totally open to changing and flipping to an immediate bullish kind of outlook and look to buy dips or just be long or whatever. If we can establish above this level. But again, as written last night, I can't stress this enough. Buying into resistance usually is not the best of strategies. You'll get away with it, once out of, a couple times, and you think it's a good idea. All right. I would prefer to turn bullish on the breakout and then look to buy a support test of some sort. That's just kind of the process that I've always used and has always worked for me over the long term. It doesn't matter if it works once or not. It's over the long term. All right. So that's what we're talking about. We're talking about Euro. So the big level is really, kind of these highs up here. Again, futures data does close a little bit before the cash market. So you're going to have a couple hours difference and the prices are going to be a little different. So in spot, this is like 109.80s. It's basically the 20-day high. Okay. Now looking at other, things for euro dollar, other considerations, if you will, for euro dollar. Let's talk about the long held analog, right? Again, generally speaking, this has been a pretty good, a pretty good map or guideline, if you will. We've been in a pretty tight consolidation since the ECB shocker, if you will, although we weren't all that surprised. If you remember, we did publish a special report on bullish euro crosses a couple days before this happened. But generally speaking, the upside far outweighs the downside. Okay, that's fine. But when to buy, when to get long? Well, again, we talked about looking for support after a resistance break, and if we can break 109.80, then that's what we'll be doing. All right. On this analog, basically mid-February, if you get weakness into there, it's a buy, and early April, that is when we would be looking for the acceleration point in euro. So while long euro now with a really, really, really wide stop could work, I think it would just tie up trading capital for, as long as a couple months, because there is the risk that we go sideways for a little bit. Okay. What about seasonals? And the seasonality considerations, euro actually turns bullish after next week. Okay, so you can see this week ends. It's still not bullish. Okay, euro actually turns bullish the week of, what is that, 2/5. Okay, so 2/5 is a Friday, so it turns bullish after 2/5, after February 5th. That's when it turns bullish, and that's actually pretty close in line with the seasonal, or with the, I should say, not the seasonal aspects, but with the analog, because this right here would be a Monday, 2/8. All right, so again, all signs point towards potential, getting big bullish euro dollar, maybe on, not next week, but the week after, which is not far away. It's 6 days away. Okay. I got a question here. Let me see here. Gary, what's going on? Gary's got a question, and this is a good question. I'll cover this right now. If you have time, could you give me your basic guide to your seasonality charts? Absolutely. So, on the website, I'll show you, and then I'll kind of go through and explain a little bit more about this. On the website, if you go to the long-term charts, okay, click on seasonality charts. There's various ways to calculate it. Okay, we've got all the seasonal charts here that we follow. I don't have some things like gold and crude, which I would like to have on there, just because I don't have the data in the software that I use in TradeStation for it that goes back far enough to make it like reasonable, right? Like you could put up anything for this. You can see if I put up gold, here's gold futures. Well, I've got 15 years now. You can see it's bullish up until 219, basically. Okay, so there you go. But the seasonal charts, okay, so let's go to like dollar index, because that we've got like 40 years of data for this. So the pink line is 15-year seasonality. Okay, the green line is 5-year seasonality. The red line is the 30-year, so that's like the furthest look back. Black line is 10, blue line is 20. So how I use the seasonality, okay, first I'll tell you how it's calculated. It's pretty simple. For all the look back periods, all it's doing is taking the average price change over that amount of time, okay, and it's starting anew each January 1st. Okay, so it kind of indexes, if that makes sense, indexes the price moves from January 1st onward. And, at that point, then, you can average all the price moves from January 1st onwards. Now, generally speaking, if you have all these different look back periods, again, 15 years with the price, black is price, Okay, 15 years of seasonal forecast. And then you have, you can see 5 years in green. So recently you've had more of a dollar bull. It makes sense that the green's going to stick out as dollar bull. But generally speaking, over time, you can see that they all are pretty close. In other words, they all pretty much match. That means that there is a seasonal tendency. Okay, they're not going all completely different directions all the time. There are fairly strong periods of seasonal behavior and fairly weak periods of seasonal behavior. So, as Hossein asks, explain how you use the seasonality a bit whenever you have time. So, what I would do, Hossein, like let's give an example right now. Okay, Australian dollar. We came into this week, we had put a long Australian dollar on, had a good trade, got out at 70.75. Said before FOMC that I wanted to get back in at 70. Unfortunately, didn't follow my own plan, but that would have, been what we, would have done if I had some balls. And here, for example, is Australian dollar seasonality. So price is king, okay? Seasonality is just a secondary thing here. But if you look at the long-term page, you know that we had kind of a bullish idea on Aussie coming into this week for several reasons. You had very long-term divergence on the weekly. You had downtrend support on the weekly. Okay, within the whole downtrend from 2011, we'd come into an area where we tend to find some sort of, counter trend bounce, if you will. So then the seasonal chart, you can see every single time frame except for 15-year actually turned up this week. Okay, so that tells me that, okay, fine, I've got these other thing price considerations on the chart, which are bullish because the divergence and the support and blah 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 blah. So we've got a good price level to work with as well. We had I believe it was 69.37 or something was the level we were looking at for support in Aussie, and that's why we had that order at 69.38. So we were like, okay, we'll buy Aussie. That's fine. We also had this in our toolkit, if you will, telling us that it was on our side, the seasonal aspects. Now the good thing about this is a different way of looking at it. Okay, 5, 10, 15, 20, and 30-year seasonalities, and these are monthly performance metrics. Okay, so this tells you if the month tends to be weak or strong. Well, you can see that for Australian dollar, the strongest months, there are 3 months that stick out as really strong. February, April, June, actually 4 months, and October. Okay, so what we're going to be looking for is a really strong February. So look what just happened on the Australian dollar. We just had a head and shoulders breakout. Head and shoulders breakout, head and shoulders breakout, target 72.70. Okay, February starts when? Starts on Monday. Seasonality for all time frames is bullish starting on Monday. Okay, so what we're going to look for is a buy very early in February. It might be just a retest down here of 70.50 or so. Okay, and you know what? That would actually be old resistance as well. You get the old parallel right here. Okay, so you can see that's kind of how I would look at it. I don't look at it as a end-all, be-all. Again, price is king. You do have to look at price first, but it is a nice piece of information to have on your side. In combination with something like a price pattern or whatever, price pattern first and maybe some sentiment and looking for turns, it's good. But it's not just the turns, it's also the periods. So if you know that you're going into a seasonally strong period, you might want to focus on those setups on that side. So in the case of Australian dollar for February, it is actually the long side, as you can see. And you can see too that Aussie tends to remain firm basically throughout February. Okay, so this would be going into the end of February. So hopefully that kind of answers a little bit, as far as the seasonals and kind of how I look at it. It is definitely a secondary thing, but it's great to have this on your side. I don't have the DAX on here, but here's the S&P. Okay, bottom actually this week, and the seasonals are positive more or less until the week of February 12th, and then they turn down again. Generally speaking, obviously, stock market history, you can see, is going to be overwhelmingly positive. The further out you go, the more positive it is. In fact, over the last 30-year seasonality, September is the only month that's not positive. Okay. Alrighty then. Let's move on from there. So Euro, we talked about volume, analog. We have a really tight range right now. With Euro dollar, so this is the chart we've really kind of been focusing on, right? You can see we had resistance here. We actually did trade off of it a little bit last night. Guess where we found support? Yep, the year open overnight, 108.72, almost to the tick. And we've come into 109.55. We're actually putting in some pretty nice Fibonacci relationships here on the really short term. You can see taking this week's range basically from 107.90, which is where we opened the week, right on the lows, which was the high volume level as well. I can show you on the hourly chart. Here's Euro hourly futures. This was ECB. Remember that last week? And what happened? That hourly level ended up being support, 107.90. That's why 107.90 was written into the support resistance on the short-term levels that you get, every day in the swing update. So here we are. So Euro, former resistance. Let's say we break above 109.80. Okay, great. Let's say that happens. We're going to be looking for support back on this line here, which would basically be around the 109 figure. Okay. Don't have any plans to initiate a long, right now or probably even tomorrow. But as we get into the first week of February, we'll really start paying attention to the euro a little more because it does, we have had a tight range. We are starting to break out. I know that I said I thought it was going to 106.35. You know what? The market changes. You got to be flexible with it. Some people get kind of like angry and they're like, will you change your mind? Well, of course I changed my mind. Flexibility is like the best possible thing you can have in trading. If you're not flexible, you will never ever last in this business. Okay? Because you'll stay married to an idea and you won't change, and you'll end up just quite simply either taking huge losses or missing out. So, still kind of trading in no man's land for me as far as the euro is concerned. So let's move on from the euro because I really don't have a ton of stuff to say there. Let's look at dollar Swiss position. Been in for actually quite a while. Again, we have this idea that longer term dollar Swiss could really kind of be a big winner, right? Was talking with a colleague about it today, and I was asking him if he had any big. He's a cycle analyst. I said, "Do you have any big cycle stuff coming up for dollar Swiss?" He said, "Well, it's really tough to do the cycle stuff for levels on dollar Swiss right now because no one really knows where the low was last year." And that, think about it. There, you can go to any bank; they'll have a different quote for what the low was last year. I mean, there were rumors of it printing down in the 60s. You had 70s, 80s. I mean, no one really knows. There's like a 2,000 pip range. Okay. You guys can hear me, right? Gary just said the sound's cutting in and out. I haven't seen any problems with the sound here so far on my end. I know sometimes it does cut in and out. I know when I'm in a different office, sometimes it keeps going in and out, but as of right now, it does seem to be okay. Okay. All right, Keezy. All right. Well, I will try to. If I notice anything on my end, I will let you know. Anyway, let's go to the daily chart. Okay, so we have an uptrend here, dollar Swiss. Scrolling out. This is what the market looks like before it makes a giant breakout. Okay. Now, again, we don't know if, we're in a small position. I don't know if that breakout's going to happen right now or if we're due for some sort of a washout failure. Either way, what I'm watching for near term, okay, would be for the market to end up, if we do come off more than what we have, I'd be watching for the market to find support down on this parallel. Okay. Hopefully not all the way down here, because if it came all the way back to this one, we'd probably end up getting stopped out. Okay, but ideally looking for it to find support around, 10, sideways would be better, and 10080 would be ideal because you do have former, kind of former resistance there. But if that doesn't work, then 100, 50 or so would be where I'd be looking for. Right about here, 10050. You can see the spike high here would come in here early in February, early next week. Okay. Again, 102.20, 102.40 could end up actually providing decent sized resistance. So if we traded up to there and failed, I would be willing to abandon this trade. And here's why. Okay, so 102.18 is the high back here on the 18th of November. All right, 102.17 actually is where you would have two equal legs from the low back here in December. And in Elliott, this would be counted as A, B, C, X, A, B, C. Okay, so that is just a possibility. All right, again, this still implies that you do get one more run to a new high. Okay, so let's say that we trade up to a new high and we get something like a big 4-hour reversal candle or whatever, early next week. And I know that we're actually coming into a dollar seasonal week period, and I'm still long. Well, at that point, okay, fine. Let's take these chips off the table, and at that point, who knows? Maybe we'll even look to go long euro, right? But in the meantime, I do think it's good to sit with this position, patience in setups that you kind of believe in, right? Also patience in raising your stops, because, let's say you would have raised, there's a bunch of times we could have raised a stop here. We probably would have been stopped out. I wanted to raise a stop right here, actually, to this level, okay, last night, which would have been 101.16, we would have been stopped out already. Okay, so that's another thing. We trade up here, then you can raise it, and then if you get taken out, you're taken out of a good trade. All right. So patience on this. 102.20 does look to be pretty decent sized or pretty decent, well-defined level, not just from the horizontal level that you have here from a November 18th high, but also two equal legs from the low back on 12/14. Okay, so that's something to pay attention to with dollar Swiss. S&Ps have fallen like 10 points since I started talking. Has dollar yen done anything? Come off a little bit. So dollar yen, and here's Hossein was asking a question, and Gary was too, about seasonality earlier. So this is a good example here of dollar yen actually kind of going against it. So let's go to last night's update, right? Okay, so dollar yen we've got this, right? And this is what I mean by price is king. Okay, I actually think that dollar yen will end up trading up to 119.70, maybe back to 120 or so. Okay, the year opens 120.20. I also know that when I look at a dollar yen chart, I know that, well, we ended up trading, there's that trend line that goes from, and I don't have it drawn here, do I? But we had this 1990 to 19, there we go, 1990 to 1998 trend line, which basically, well, on log scale, like pinpointed the high last year, okay? I also know that we broke support from the parallel. Now, this is a parallel, this former lower parallel could come into resistance at a later date. Another reason to think why we could trade up into the 120s. But on a short-term basis, okay, on a short-term basis, short-term is in a 4-hour chart. This is about as well-defined a resistance as you can get. Okay, you have original slope. So you've got something on a price basis. Coming into it, we had a 4-hour reversal yesterday after FOMC. Okay, we kind of traded higher, then reversed, been kind of going sideways for a whole day now. But you know, these are opportunities that are there, and the reward to risk is solid. I mean, I don't necessarily care where the profit target is. I know that I put at 117 on half just because that's a really well-defined level. All I care is where the risk side is. And at this point, you've got price level, you've got resistance from the upper parallel, you've got a 4-hour reversal, and you have the momentum that I talked about with that 4-hour RSI. And you know how I talk, or I've showed several times having the divergence that is not just by the eye, but is calculated. So we have that, and we've had it for like a while. I'm going to erase everything so you can see it. Okay, so you can see, right, you see all the purple dots, if you will. We had one last Friday, tried to go short, got stopped out, then it came back down to where we were looking for anyway. But we've got all this divergence up here. So this is a 4-hour chart, basically telling you it's really weak. These are signals that are fairly rare. We've just been getting a lot of them over, the last couple, last week, last Friday, and then basically for the last 2 days. But you can see that these don't happen too often. I mean, we had one literally right at the high back in November, had one at the low here in October. We had one at the high in September. They don't all work. These wouldn't have worked going into August, although the top was about a week later. But you can see when you get these, the risk is tight, and the downside is you've got good potential on the downside. Okay. So again, although I still think that dollar yen does trade higher, maybe, we form some sort of an upward sloping wedge before we fall apart, at a later date. Bigger term, bigger picture behaviors changed, and you should take advantage of bounces and sell signals into resistance now that behavior has changed. At least that's how I'm looking at it. Okay. Alrighty. So that's what I'm thinking with dollar yen. If we do trade lower from here, again, would be watching for support down here near 116.94 daily reversal support. Again, that's just the close of the low day. You can read more about daily reversal support if you go to the resources section okay, and what that means. But would be looking at 117. It's also, by the way, 117 is also pretty close to the median line down here, right? Right here. So the median line that's kind of like saved dollar yen from falling significantly. Okay, so this would be right down here is, yeah, you can see the close from the day that made the low right here on the 20th, 116.93 on this feed. It's also the median line. So if we're going to get down there, it's probably going to be pretty soon. I would say Friday or Monday, just judging on where the intersection is. And then, look to sell at a higher level. So that's what we're looking at as far as dollar yen is concerned over, the next couple of days. If it takes out the highs and stops out, it's a pretty tight stop. Shouldn't be anything catastrophic. Let's look at dollar CAD and crude. The crude chart is pretty crazy in terms of actually how volatility has just clarifies, right? I mean, there were headlines out of headlines. Let's look at like crude oil. Let's go to Google News. Okay, Russia floats OPEC meeting, prices spike. Oil futures trim gains as hopes fade for output cut. Oil prices soar in production rumors, blah, 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 blah. I mean, there was all kinds of stuff going on here with headlines today in crude oil. It's just unreal. Sometimes I can't believe how clean these chart levels are when the markets get this volatile. Last week when we traded 21% higher in 2 days from the low, right? Pulled back, said to watch the blue line for support around 29.35 to 29.84. Support ended up coming. The low was 29.25. That was it during European hours on the 26th. Okay, so that would have been on Tuesday. Well, since then, we've had a nice rip, and the high, 34.85, which, again, 61.8 retracement, or the swing, the 61.8, difference of the, or 61.8 retracement of the latest swing lower, which is from the January 4th high. So for all intents and purposes here, the 61.8 retracement of the 2016 range, okay? What I like to call that is you're basically scaling to a Fibonacci, level, right? The market is, you start new, like index the market from the beginning of the year, and you have very clean levels to measure from, right? There's no guesswork in determining where to take your fib from. Start from the new, the new high for the year to the low for the year, and we stopped literally 3 ticks. Okay, the fib retracement was 34.85. We stopped 34.82. Okay, and so this is a huge, huge test. And it's not just because of the fib, right? We've also got, we're talking about this, scrolling out, we've got slope levels here, basically former support, okay? These lines becoming resistance. Now, I do think that a more important low is in place for crude, just as I think that a more important high is in place for dollar CAD. Okay, so when it comes to trading these things, like dollar CAD, it's important to obviously get your price, but here was the original slope that we had, pitchfork, Andrews line, whatever you want to call it, for dollar CAD, okay? lower parallel did end up becoming support, or yeah, resistance. Okay, it was never really support in the first place, but it still acted as resistance, which is interesting. I would actually look for that level to act as resistance again. So let's say that crude pulls back a little bit, because again, this level is just massive, 34.85. 34.85, and let's say it pulls back a little bit, and maybe working with this as a new bullish fork potentially. Excuse me, I have to sneeze. Let's say this pulls back. Crude oil would be watching for support, maybe around here, maybe around 31.36. Former resistance. So if we end up pulling back, going to get some sort of a bounce in dollar CAD. Dollar CAD, this is its own big, oh, thanks, Gary. This is its own big level, actually. If you scroll out, and again, if you are like, where the hell are these lines coming from? You can get that if you go to the long-term page. You can see a little more clearly, like where this is all coming from. So long-term charts, dollar CAD. So you could see where these lines come from. Okay, back here in July of 2014, actually, that entire slope. Okay, you can see where those come from. So that's where these are coming from. Anyway, big inflection points on these is support. Obviously, was support right here at the very, very, very beginning of this year. This is where we opened the year, okay, right here, 38.16, and we've made it back to that line. And you do have a Fibonacci relationship here. This actually 39.69 does represent 0.618, relationship of the decline from 42.25. At this point, any stops on shorts in dollar CAD would be 43.30, just above the high that you made here on 26, which again was on Tuesday. So where's former support? Well, former support and resistance actually is going to be this line right here, as well as the median line. Okay, it's a good reference point, and that's going to be around former congestion, which is also going to be around this level. You see where I'm going, big confluence up around 142. So you do have a 4-hour reversal bar here, combined with with crude oil coming into support, big support with big resistance. Implication is that dollar CAD could maybe stem the big decline that we've got, over the last, few weeks, really the last week and a half, and looking for some sort of just choppy, messy, sideways type of, ugly, kind of a wedge would be great, or a pennant I talked about last night. In the post. So you get kind of a little bit of, kind of a pathetic rally would be kind of a mean way to say it. But if you get kind of a gross rally like that, you want to sell it into that area, which looks to be around 142. Again, it's too early to get specific on an entry at this point. Just kind of envisioning what would happen, what I'd be looking for as far as a short's concerned. So, again, the process, we have a tradable high. I mean, just the month ends tomorrow. Look at what the monthly candle is going to look like on dollar CAD. It's crazy. Okay, you have a huge weekly reversal last week, probably due for a little bit of consolidation, especially after the capitulation we saw with the volume today. So here's Canadian dollar volume. Okay, remember that, was it Bank of Canada that came out, and this is one of the volumes fading strategies, and I talked about this with NFPs, which was just a few weeks ago. But when you have the volume, you get this crazy hourly bar, right? And you get significant volume. The market ends up getting jammed one way or the other towards the end of the hour. Whichever way the market ends, fade it. Okay? Within the context, of course, of your analysis. So what that means is that, this is CAD futures, okay? So it's going to be opposite dollar CAD. Obviously, dollar CAD would have been, declining, not rallying, as CAD futures have. But what this is telling you here is that, dollar CAD was sold hard after Bank of Canada, and then it was bought big time and jammed right back into the highs, or in the case of CAD futures, into the lows. Then you fade that, okay? That's basically all algorithmic program HFT crap, and fade that volume. It's almost like you have to think differently than we used to, okay? Now, this is not a strategy that's like, something that you do all the time. Okay, it's when there is the potential for capitulation, you're coming into a big level. Well, I would say that the level we just came into is pretty big. All right, just went over that dollar CAD chart. Well, guess what? We just had the biggest volume in 1 hour since we had at this level down here on 120. Okay, so that's a big, a big response at a big level, right? Huge volume at a huge, chart level. So it basically is reinforcing the idea that the level we have on the chart with the median line and everything else is important, right? Because there's a ton of trading that took place there. So I would be looking for the market to kind of drift a little bit to sideways and digest all this, maybe come off a little bit, which would mean dollar CAD kind of bounces, okay? Now, if you're looking at this chart, the hourly close, where's the dollar CAD hourly close? Let's go to the 60-minute chart. Try here. Now, I have no desire myself to buy dollar CAD. Okay, I actually think it's going to trade to 142, and we're trading at 140.50, and the hourly reversal level, which is the high volume level, is 140.15. Make it red. So 140.15 could actually be support, but again, I'm not really personally down to buy it just because I'm going to trade with what I think is the larger move at this point, which is the other way. It's on the downside. So I want to sell rallies, but that, does not mean that buying dollar CAD with a stop under the low today is a stupid trade. Okay, you do have the reward to risk. It's 142. You have the volume level. You have the support, the sliding parallel. So the trade is there. The analysis is there. It just is up to you, what your style is. You're a little more active, a little more aggressive, then, by all means, this is something you might want to do. It's also, we're heading into a Friday, and I don't like fading going into a Friday, just because we know the tendency for the market to take out stops on a Friday before it reverses, but something to think about. So there's dollar CAD and crude. Kiwi, I really don't have much of an opinion on right now. You know that I like Aussie higher more so than Kiwi, by not only the Aussie Kiwi trade, but just looking at the two charts on the longer term, Aussie coming into longer term support, Kiwi not really at long term support. It's kind of coming from more that median line, which is big resistance, and the big support is a lot lower. So Kiwi could chop around and kind of just do nothing for a while, in my opinion, within a range. Doesn't mean, again, that there's not going to be any trading opportunities in it. Just at this juncture right now, I think it could kind of trade all over the place. So here's Kiwi, right? Aussie's up here breaking these highs. Kiwi's lagging. You could end up trading, back up to, in some sort of a choppy fashion, make, some sort of a wedge, whatever. You could end up getting back into the 66.80s or something like that at some point over the next 2-3 weeks, and still be within a pretty big decline as far as Kiwi's concerned. So, the really short-term picture, I would be watching for support at 64.38, which is yesterday's RB and Z level right here. Okay. Let's look at pound dollar. We're coming into big area for pound, a huge area for pound. Okay. In fact, what I want to do is I'm going to go back. Let's go to a weekly. First, let's go to a monthly. All right. So remember this trend line? Here we are on a monthly chart. Monthly basis, we might be trying to hold this. Okay. Let's go to a daily chart. Okay, here's the daily chart. We're trading basically right at it, as you can see. Simple analysis right here, right? This trend line, which many would argue and say it's not a trend line because it doesn't touch 3 points. Okay, fine. Let's just say that's slope though. Well, guess what? That slope touches some pretty big points here. Okay, including the election gap last year. Remember, gaps are just as important in slope analysis as highs and lows are. Okay, that makes where we're trading basically right now pretty important in my book. Okay. I mean, it doesn't get bigger than this. So, you know, pound is a difficult animal to tame. You know, you get just extreme pain trades in pound. Massive reversals, massive sharp trends, takes out levels you don't think it's going to take out. When it takes it out, you're like, well, now it has to keep going, and then it doesn't, it reverses. I mean, pound is just a different breed. So yeah, tough to trade in my opinion, and I think a lot of other people's opinion as well. But this is where we're at. So, you know, am I going to make a big call on pound here? Not really. I just, you know, I've been burned by this thing one too many times, I think, to get real aggressive with it. However, there is a trade in pound that I do very much like. As you know, euro pound has just completed a head and shoulders pattern that goes back to March of 2015. So it's a 10-month bottoming pattern. You know, you get the breakout. Okay. Where's the breakout target? It's a lot higher. Okay. It's all the way up at 80.30. So there's plenty of upside left for this. Now we've had a breakout, and as you oftentimes do after a breakout, you're getting consolidation. Okay. Well, let's say that we get 3 waves down here. We want to buy in 3 waves down. No better place to do that than if you get basically weakness into the median line. Even better if it happens sooner than later, in my opinion, because that would also put you kind of on course with the breakout level or the former highs, right? Former resistance becoming support, you know, et cetera, et cetera. So keep an eye on this chart. I will continue to keep an eye on it for you, obviously, and publish updates as I see fit. I'm basically just kind of waiting for this thing to, you know, finish what I think it's doing, which is trying to make 3 waves down from the high. If you go really short term, not really short term, but short term for me at least, and go to a 4-hour chart, 240-minute chart, you can draw a bearish one, and you could end up getting, you know, potentially something like this, right? Where we kind of have a confluence of levels, down, up, and sideways. It's always the best. You know, that would put us near 75. So we shall see. But, you know, a chart like this where you have this 2 equal legs down there actually are deeper. But a chart like this where you have this big breakout in pound after a 10-month pattern does suggest that you're going to see a pretty weak pound. Okay. So we'll see. Again, nothing you can do other than, in my opinion, kind of pick your levels and put on your trades. The market's going to do what the market's going to do. Okay. So there's euro pound, one of my favorite cross ideas right now, as well as, of course, you know, Aussie Kiwi. Other things I wrote here, notes. Oh, the dollar knock trade. The wedge, which was published this the other night, Sunday. Again, making headway here on this. This might actually be the slope to work with right here. Okay. So we'll see how this progresses. But you're going to be coming into some support for dollar knock, and we're going to want to see some sort of a failed corrective rebound, if you will. By the way, a wedge like this, the target for it is all the way back to where it started, which would be erasing everything from the 2015 low. All right, so you're talking about a substantial move that would be coming for dollar knock upon the break of this wedge. And this, of course, all fits with what we're talking about in terms of the U.S. dollar. This is Aussie, by the way, the weekly chart, right? We've got the divergence here, the first divergence on a weekly basis since the week of the top, which was all the way back in July of 2011. So you can see you get plenty of bad signals on this, okay? But sometimes you get some really good ones too. US dollar, the weekly, have showed this plenty of times over the last couple weeks. For whatever reason, it works or has worked really well at big tops weekly chart. Okay, so this is really long term, but you can see here it has not worked at all when looking for bottoms in the dollar over the last 15, 16 years. So I think this is the big trade, is the dollar lower again, as I wrote the other day, 2 days ago. Just don't know if it's now or if it really gets started in a couple weeks to a month, but this is the big trade. Okay. The next trade that I probably will put out will probably be a long Aussie dollar order. Back near 70.30 to 70.30 to 70.45. Okay, stops under 70 at this point. Would be targeting 72.70, 72.80. Okay, so I'm going to wrap it up there. Are there any questions that you guys... Gary says your sound's been perfect for the last 30 minutes. Sweet. Leon asks, is it possible to have one place on the website for trades that you put out? Well, there is. The trades only appear at the swing updates. So the latest swing update will have the trades and when they were active. And then trade. This obviously was from last night, so when I publish today, this will be active. Yeah, I mean, this is the only place that they appear is in the swing updates. In real time? Well, I mean, this is pretty much real time. I mean, the publish it each night with an order, they rarely, I'm trying to get away from putting orders on Twitter just because it's just chaos. When you're doing the intraday decision making and stuff, it just doesn't work out as well, especially when markets are kind of quiet as they have been in FX. But yeah, I mean, this is as real time as it gets with, as far as, I'm not sure actually what we do put these on at night and the orders for the next day, and it's pretty simple, I think. Gary asking, will the webinar be next Wednesday or Thursday? So they're always on Wednesdays unless there's something on that Wednesday, right? So if there's like FOMC or whatever, that's when, we'll move it to Thursday, because to be honest, sometimes things can change quite significantly with a big move on a Wednesday after FOMC or whatever. And it's stupid for me to do the webinar on Wednesday because I have a lot more different things I'd like to talk about the next day. But yeah, it'll be next Wednesday though. Keezy asking about the trend table. The trend tables are, so those are right here. And these are just algorithmically based. So, it's based simply on a rolling pivot method, which you can read about in the resources section for rolling pivots. We had a quick question on Euro Yen actually just now. Euro Yen. So I'll go to a daily chart for Euro Yen. Would be looking, you do have an overshoot here. Okay, so that indicates kind of a weak market. I would actually be looking for resistance. First level right here is actually 130.67. That's where we opened the year. Other than that, I'm not really interested in trading Euro Yen at the moment because it's two funding currencies against each other. Now, you can see you're going to have a clean. That will change, okay? You're going to have a clean level to work with right here as far as looking at a pitchfork on the upside, okay? So watch for support. This is daily reversal level. This is from 121. Interestingly enough, guess what? I love this. This level comes in, intersects right here towards the end of next week. So Euro Yen would be watching for resistance near the year open, up near 131 potentially, which is a former low. Nothing, complicated there, just a former spike low. Okay, so resistance up here. Support probably around here. And oh, guess what? We have 6 days up in a row. I'm seeing this on the chart right here. And that hasn't happened, I don't think, in a while. Consecutive ups. 6. It hasn't happened in a while. Hasn't happened all the way since June of 2014. Anyway, so this is what I'm going at on Keezy on Euro Yen. I'd be looking at, again, 131 region for, potential resistance before it comes back a little bit, and then we'll go from there. All right. Okay. So I do have to wrap it up because I got to run. But awesome attendance today. Everyone, thank you so much for joining. I'm going to get this archived, and have a great rest of your week. And we'll be out with a update later tonight as always. Okay. All right. Thanks a lot. Take care. Have a great rest of your week. Bye.